A sharp overnight fall in the U.S. equities weighs on sentiment as fears of Fed persistence resurfaces. Metals as well as IT lead the slide today, while FMCG shows some resilience in trade.
Vedanta tells CNBC-TV18 it isn't looking to divest its steel business but will expand capacity to rank among the top 5 steel players in the country. It is also optimistic on the outlook for metals with China easing lockdowns.
The Reserve Bank of India has tightened norms for securitization of debt by barring banks from undertaking such exercises for loans less than 365 days maturity. The move could impact several NBFCs.
IRB Infra gains on strong toll collections. JSW Energy sees green on its maiden wind unit starting up. Astra Micro rises on the fundraise plan, while Bajaj Consumer gets a likely buyback boost.
Hello and welcome to Business Lunch. I'm Nisha Podar, and with me as always is my co-anchor Pavitra Parekh. So Pavitra, weekday of trade today. US equities is one factor which has really bogged down on our Indian markets as well. But there are several factors: the geopolitical issues, the crude oil dynamics, economics of the pricing of crude, as well as the interest rate hikes. And tomorrow we have a big RBI policy also to watch out for. All this really weighing on the market today. Nifty 50, even though opened at about 18,600 levels, the entire day has been trending around those levels only. Just moments back, it has slipped back and touched that 18,600 level, but had slipped below. So about 0.5% down on Nifty 50. Sensex has lost over 300 points in the trading session at the current moment, and it's totally red on the screen with Bank Nifty also, even though showing a slight outperformance to Nifty and Sensex, but is still beaten down in trade comfortably. And also mid-cap universe is over 0.5% down. So there is this weakness all around, an advanced decline ratio because of wide sell-off across several pockets is also on the weaker side. On my screen, Adani Enterprises standing tall with over 2% gain at the moment. Pavitra.
Hi Nisha, good afternoon. So like you pointed out, it is really the weak handover that was weighing on our markets, and it seems like the reaction to the US data has come a day late, but nevertheless today it is, the banking stocks like you mentioned, which were holding up for a good part of the morning, but there has been quite a slide which has come through in these names as well. So take a look at SBI, Axis, Kotak. What is doing well, however, some of the smaller banks, so take a look at those, something like a Punjab and Sindh Bank, your Bank of India. These stocks are seeing huge moves come through, even an IDBI Union. These ones are all holding up really well. So keep your eye out on these. Some from the consumption basket, the larger names, the likes of HUL, Britannia doing well, in addition to Adani Ports, Adani Enterprises that Nisha mentioned. On the downside, it is a lot about the tech and metal names for today. So take a look at the larger names. Also, the entire mid-cap IT pack is also seeing cuts. But IT and metals are the sector where you're seeing the maximum damage today. That's what's happening with the market action, and we're going to keep bringing that back to you. But first up, the big market cue that we will be watching out for, the RBI's Monetary Policy Committee will announce its rate decision tomorrow. And Ritu is standing by with the key expectations from what will be the last policy announcement of this year, that is of 2022. Ritu.
The Reserve Bank of India's Monetary Policy Committee is widely expected to hike rates by 35 basis points in this policy and bring the repo rate to 6.25%, according to the majority of the respondents to our poll. Now, this will be the 5th consecutive rate hike by RBI, but the pace of the hikes is expected to be slower, with some moderation expected in inflation and signs of a slower growth. Now, as far as the peak repo rates are concerned, the respondents were divided between 6.25 or 6.5%, with some even expecting peak rates at 6.75% in this hiking cycle. The inflation forecast for the year is widely expected to be left unchanged, and similarly, the GDP forecast of 7% for FY23 is also unlikely to be tinkered with in this policy. Now to the stance, where will they pivot or will they not is the question. Well, not yet, according to our poll, with half the respondents voting for the stance being retained at withdrawal of accommodation, with a third expecting some tweak in the wording of the stance only. So in terms of what the market markets will be closely watching out for? Well, the wording of the stance, of course, and the voting pattern also, because any disagreements between the members of the MPC will be a focus area, because it was evident from the last minutes of the meeting that two of the external MPC members, Dr. Ashima Goyal and Dr. Jayant Verma, are likely to vote for a smaller increase in the repo rate or no hike at all, and some view this as a sign that the rate hiking cycle is close to an end. The other focus will be the transmission of rates, because if you look at the data on your screen, while RBI has hiked rates by 190 basis points between Jan and November, bank lending rates have only gone up by 80 basis points, so the transmission is just about 42%. And when you compare this with other countries, transmission is near perfect in countries like the US, South Africa, Australia, even to an extent in Canada, Mexico as well, but India really lags behind with just 42% of the rate hike transmitted. So this is an important metric that the MPC will keep in mind.
All right. Thanks, Ritu, for giving us all those details. So 35 basis points is the majority of the view and the expectation coming in of a rate hike from the RBI. But also an important takeaway and highlight to note is that it has not been transmitted by the banks fully, the already existing rate hikes that have been announced by the Reserve Bank of India so far this year. Moving on then, the Reserve Bank of India has also changed securitization guidelines, and now loans with residual maturity of less than 365 days can no more be securitized. Abhishek Kothari, our in-house banking expert, is here with more details on what does this mean for the NBFCs. Abhishek.
Well, this is an additional point put in by RBI with respect to what kind of loans can get securitized by NBFCs to other lenders, especially the banks. So the stocks could be in focus are the NBFCs with lower duration of loans, the likes of MFI, that is microfinance, and gold financiers. RBI has made changes with respect to securitization process, wherein they have said that loans with residual maturity or loans which are under overdue of a period of less than 1 year, that is 365 days, but have served about 3 months of general interest to the NBFC cannot be securitized. So this can have an impact on the securitization volume. Remember that NBFCs largely do borrow from banks, so they do securitize their portfolio with respect to priority sector loan targets for the banks. So quality of loans securitized will improve over here, and also the fact that shorter duration loans may not be securitized, which could have a rippling effect, especially on the shorter duration books like the likes of microfinance as well as gold financiers. Back to you.
All right, Abhishek, thanks a lot for getting us all of the details on the securitization norms which have been tweaked. But with that, let's also bring you some important corporate commentary. My colleague Santya caught up with Bharat Puri, Managing Director at Pidilite, and began by asking him about the input cost trends that we are seeing, as well as Pidilite's pricing strategy in that outlook. So let's listen in to what he had to tell us.
See, we've always consistently maintained that we will price at 75% of inflation. Fortunately for us, overall commodity costs have moderated, and we therefore do not feel the need for future price increases. What we're also clearly seeing is that as our high-priced inventory is coming down, from the fourth quarter onwards, and hopefully by the first quarter of next year, we will be back to our traditional margin range.
So talking about FMCG, rural market is a key market for you people. But talking about that market, it is yet to bounce back, from the lull caused by the pandemic. But do you see any recovery happening anytime soon? And, what exactly is your strategy to ensure that the recovery actually happens much before you guys are anticipating it to happen?
See, there is no doubt about the market, about the fact that the rural market is under strain. Demand conditions have not been as buoyant as they've been in urban India. And clearly, therefore, as manufacturers, you will keep taking steps to, for example, educate the consumer, work with the consumer in stimulating demand. We're also hopeful, given the good monsoon overall, and given that the government has a fair amount of focus on the rural areas, over the next 6 months, I think rural will start looking up.
Oh, that's a very positive statement here, sir. But talking about overall demand, specifically semi-urban and rural, inflation has impacted that. So if you can help us understand what was the extent by which this demand got impacted, and what's your strategy to minimize the damage that it has caused, or the way it has affected your margin?
See, there is no doubt about the fact that inflation in any emerging economy is going to impact demand because the consumer's income does not go up in the same proportion as inflation goes up. Therefore, as responsible manufacturers, if you believe that the inflation is not long-term, you are going to focus on making sure you don't take price increases to the extent of inflation, you cut costs elsewhere, so on, so that the impact on the consumer is minimized as much as it can be, and that's what we've been doing.
All right, so inflation a big concern for the consumer companies, and Pidilite says in the next 6 months, rural demand should recover. With that, we'll slip into a short breather on Business Lunch. On the other side, we get you updates on what's driving the crude oil prices. Stay tuned for more details.
CNBC-TV18, celebrating 23 years of business leadership.
Hey guys, welcome back. You're still tuned into Business Lunch, and here's some interesting data for you. In 2022, block deals with a total value of over 3 lakh crore rupees have taken place on the exchanges. The reasons behind such a large number of deals are manifold, and Vivek is standing by at the big wall now to tell us more about this. Vivek.
Well, that's right. Like you mentioned, 2022 has been a year where the number of large block deals exchanging hands in the Indian markets has been very high. Total value of the blocks on offer was well in excess of rupees 3 lakh crore, quite high compared to the recent years. In fact, if you're talking about this particular size, it's almost 1% of the total Indian equity market capitalization if you take into account BSE data. So we take note and highlight the large block deals that happened in 2022, and the liquid Indian market has actually allowed early PE investors to make manifold returns in their early stage investments. However, the reasons for these large trades have been manifold. Anchor investors have exited part or full stake in new listings as anchor lock-ins opened up, even as PE funds eyed strategic level exits. Select block deals also were triggered to adhere to regulatory requirements, the case in point being the insurance space specifically. Now, other reasons also included restructuring and simplification of group holdings. In fact, if we're talking about KKR, it managed to get a 5x return in 4 years in this particular deal, in the Max Health deal, making it the largest exit for the fund in India as it exited its stake in Max Healthcare in August 2022. This deal was valued over 9,000 crore rupees. Also, CPPIB trimmed its stake in Kotak Bank, while Blackstone exited a major chunk in Sona Precision Holdings after its partial exit via the IPO route as well. Financials like HDFC Life, SBI Cards and HDFC were in focus as strategic investors, regulatory requirements and PEs trimmed stake, while a family-level restructuring saw the Triveni twins, both Triveni Engineering and Triveni Turbine, in focus in the month of September. Prior to the mega merger in the media space between Zee and Sony, Invesco too trimmed stake in Zee, while CDC Group completely exited their stake in Rainbow Children's Medicare as well. A lot of focus has been on the new age listings as investors made a beeline to the exit door in these names, even as markets scrambled to understand the valuation metrics for such companies. Uber completely exited its stake in Zomato, while PE funds trimmed their holdings significantly as anchor lock-in opened in other names as well. Worries for external PE funds in their own portfolios too contributed to certain exits in this particular space as large blocks were recorded. SoftBank's global woes forced their hand in them exiting sizable chunks in Paytm as well as Policybazaar, while PEs also made meaningful exits in Nykaa as well as Delivery.
All right, Vivek, quite an exhaustive summation of all the block deals and the reasons behind it. But many private equity firms have found a reasonable price point for good returns. And it also throws in a question, are they not as bullish about the next year and took advantage of the equity market window? That time will tell us, but good summation, and this has been a year of block deals. Now, from the block deal story to the commodities space, and Brent crude trades at levels of around $83 a barrel following the OPEC Plus output decision, and also the EU price cap on Russian oil. Lots happening on that front. Manisha Gupta is right here to fill us in with how all of this is impacting the crude oil prices. Tell us, Manisha.
Well, thank you so much for that. After a 3% decline last night in case of crude oil prices, we are back into some positive cues coming in right now. And absolutely, yes, in last 1 week, we have seen the OPEC and allies meeting where the output has been kept steady to an E7 price cap at $60 per barrel coming in on Russia. And then the European Union, which also has curbed imports from Russia. All seaborne oil imports from Russia have been curbed as of now. And come 5th of Feb, European Union will also curb all crude products from Russia as well. So this still is a developing story. Markets are looking at what the expectation right now is from some form of Russian retaliation coming in. Russia has spoken about that, but we still have to see a notification or some communique coming in from Russia. Until then, it is going to be very jittery crude oil markets from here on. Having said that, it also is about the macro situation where you have seen some strength come back in case of the dollar index, and all the data that came in from US last couple of sessions has been positive. So whether it is the US jobs numbers, factory activity and services number are better than street estimate, and that perhaps brings back the flavor that US Fed could be more aggressive going forward on the 14th December meeting rather than a 50 basis point meet. There could be some guidance decisions that could weigh onto the markets going forward. So as I said, quite jittery, and every week we have seen a $10 to $12 per barrel of a crude prices range, which is much higher than what you have seen in last couple of decades itself. Markets do believe that $75 per barrel is going to be a strong support going forward. On the higher side, 95 is going to be a resistance, and within this $20 is what you could be looking at the crude oil prices closing this year as well.
All right, Manisha, thanks a lot for getting us.
Welcome back. You're watching Business Lunch. A quick look at the market, and yes, the weakness really persists. 90 points down on Nifty 50. But when we take a look at Bank Nifty, that has dipped further, and that is also because of ICICI Bank as well as Axis Bank, both of them losing some more ground in the last few minutes of trade. When we talk about other sectors, some of the gaining companies from the weaker pockets has been Wipro. Take a look at that kind of a recovery that Wipro is seeing. Some bit of buying that has been seen in IT along with Tech Mahindra as well as HCL Tech as well. But Adani Enterprises, Reliance forming big amount of support at the moment. Let's take it straight to some important national development of the day. Then on the show, the government convened an all-party meeting today to discuss the legislative agenda and also the important issues likely to be discussed in the winter session of the parliament. Now remember that the winter session is due to begin on 7th of December. Right, with that completely out of time on this edition of Business Lunch. Thanks so much for tuning in.